I'm Owen Bigland. This is the Inside Edge video blog. Okay, I'm going to make a bold prediction here. As you guys know, I never make short-term predictions here about Vancouver real estate or the stock market because nobody knows with any certainty. People that make predictions, especially the doom and gloomers that call for a crash, remember, they're never wrong. They're just early, and sometimes they're early by 5, 6, 7 years. The stock market or the real estate market goes up 40 or 50% in that time, and then when the normal corrections, which should be expected, do come, it drops by 10 or 15%. So you would have been a lot better just buying and holding, like I've always said. But here we are coming into fall 2020. I'm just going to prove a point here. And I'm going to call for a correction in the Vancouver real estate market. I'm going to call it what I've talked about many times, kind of a run-of-the-mill correction. I've been through so many of these in the last 33 years, I've lost count. But a run-of-the-mill correction in Vancouver real estate is anywhere from 5 to 10% pullback. And I'm going to call for that right now. Mark your calendars, sometime between now, fall 2020, and the next 2.5 to 3 years. I'm going to put myself out there. Now, the reason I'm saying this is what I'm putting out there probably will happen. It should. The law of averages tells me that it should. We should get a run-of-the-mill correction here in Vancouver that I've been talking about for 10 years on my blog here, and I tell my clients for the last 3 decades, they should be expected every 2 to 4 years, a run-of-the-mill correction. And we should get something a little more severe, let's call it 10 to 15, maybe even 20% pullback every 10 years or so. But nothing is off the table. We could get a correction much more severe than that, maybe 25 or 30%, who knows? But I'm going to call for a run-of-the-mill correction sometime between now over the next, let's call it 3 years or so. Really putting myself out there. Putting that out there is basically like saying we're going to get rain sometime this fall in Vancouver. That's really what it is. But the point I want to make here is the endless analysts, so-called experts, doom and gloomers. Let's put Mr. CMHC head Evan Sandal in this category as well. He's come out, as you guys know, and called for a 10 to 18% correction in the Canadian housing market. Doesn't give too many specifics. Won't really specify if that's Vancouver or Regina or Saskatoon or Prince Edward Island. Paints a pretty broad brush there. But he's come out saying that there's going to be a 10 to 18% pullback. And what I've been saying is maybe he's right. You never know. Right now, it's not looking all that good, and I would say that Vancouver, with the coming out of COVID and the interest rates and all the other things that go along with housing prices, supply and demand, Vancouver is a little more insulated from the coming recession. As I've talked about many times here, we're not using, for the most part, in Vancouver, we don't really use high ratio financing. It's pretty much all conventional mortgages here. Anything over $1 million purchase price, you have to put down a conventional mortgage, 20% or more. If you're an investor and buying a unit to put a tenant in, again, you have to use a conventional mortgage. For the most part here, I can count on one hand in the last several years the amount of buyers I've represented that have been using high ratio. And in that case, it's usually at least 15% down. So we're much more insulated here in Vancouver, I think, than what we might be from some other much less expensive markets. But the point I want to make here for people I've been pounding home is that corrections should be expected. They are normal. Again, I got a lot of years in this business. I've been through some tremendous bull runs, and then I've been through some pretty good pullbacks in Vancouver real estate. Have I ever been tempted to sell real estate? And for example, right now, there's a lot of people out there, like there always is, calling for a correction that's going to be coming. Am I tempted to sell all my real estate, kick out all my tenants, pay the heavy capital gains tax bill I owe Revenue Canada when I do sell these properties, because many of them I've held for over 30 years, go to cash, pay the tax man, pay the conveyance charges, and then buy back in when we think the market is corrected? Of course I'm not. It's a fool's game. Don't get into that. The point I'm making here is if you are buying your principal residence or in the process of getting ready to buy your principal residence, Stay the course. Save for the down payment. Get qualified. Get to a point where you can comfortably afford that house. Don't overcommit yourself. Don't over leverage, although very difficult to do, as I've often said, with Canadian lenders these days. They're going to, put you through the ringer to get pre-approved here. This is nothing like it was in the subprime issue in the '08 in the United States. Anybody that thinks it's easy to qualify for a mortgage here in Canada has never qualified for a mortgage, I can tell you 100%. Buy the house, enjoy it, and keep it for 10, 15, 20 years, and you're going to do fantastic. Don't get into this speculator trading game trying to time markets. And that's the service that I think Mr. Siddall did by even putting out that prediction. I've had many people reach out to me over the last month here regarding, his comments and him and I going back and forth on Twitter there, which I pretty much never do, as you guys know. I don't engage on Twitter. Never have, never will. But many people have reached out saying, it is kind of odd that the head of CMHC would be making a prediction like that. And a lot of people, because that's not their mandate, CMHC is to promote home ownership, help young people get into their first home as opposed to becoming lifetime renters. But just to make a prediction that the market's going to go down is bad enough. But I've had a bunch of people, and it's been in the news lately, that it's almost now like they're trying to talk down the market, which they are. Continuing to put out these predictions. It hasn't materialized yet, but if we keep talking about the negative dark clouds, maybe it'll come to fruition. It's strange. But buy your principal residence and keep it. Remember, have a holding period of 8 to 10 years minimum. Leave yourself a little bit of a buffer. Take advantage of these record low interest rates. They're incredible right now. You can lock in a 5-year rate at just over 2%. But leave yourself a buffer, because the only way interest rates are going to go from this point on are going to be up. Probably going to stay low for quite some time to come, but you should be anticipating mortgage rate hikes, eventually. Maybe 5 years from now, who knows? But here's the thing with market predictors and people that call for a crash, these doom and gloomers. Again, they're never wrong, they're just early. And it's an ego thing for these people. It really is. It's an ego thing, nothing more, because they'll throw out a big prediction that the market's going to correct 18%. If they're right, then man, they look like a hero. You're going to see them everywhere, tooting their own horn. See, I called it. If they're wrong, which most of the time these people are, not just in Vancouver real estate, but on the stock market every day. They'll make a big prediction on a company like Apple that it's going to crash, whatever. Now and again, it's rare, but every dog has its day. They might get it right, and now they look like a hero. They'll go on every media outlet saying, see, I told you so. Most of the time, though, they're wrong. And when they're wrong, there's never any accountability to these people. They just quietly exit stage right. Slink away, never to be heard from again. And that's the way it'll probably be with Mr. Siddall. Maybe his prediction is going to come to fruition here. If not, no harm done. Throw out a big bold prediction like that. You see, he's gone. He's out of CMHC by the end of this year, maybe sooner. We're not even going to talk about him. We're going to forget about him by this time next year. So there's no downside for him. And you see this every day on Wall Street. These guys will make a big prediction on a company or the Dow or the S&P. Most of them are wrong, 80% of the time, but no harm done. They just slink away back to their basement. You have to remember that. Don't play that game, as I've often said. Just buy your principal residence, enjoy it, keep it, take advantage of the low interest rates, take advantage of the principal residence exemption, the only real tax shelter we get. The alternative is renting. Do the math on renting for 30 or 40 years in a city like Vancouver. It's not a pretty picture. And here I am. Get a lot of people that'll say, I try and pump the tires on real estate. Well, you forget. Yeah, I'm a listing realtor. I also represent a lot of buyers, but I'm also a landlord, a fairly major property owner here. So when CMHC calls for a correction, or doom and gloomers come out, it just freezes more people on the sidelines into the renter pool. And that's why it's been a gravy train for guys like me and my investor clients, where I can charge $2,300 a month for a one bedroom. I'm charging $2,300 for a one bed downtown in downtown Vancouver now. Just 10 years ago, I was getting $1,450 for these units, $1,500. I mean, rents have gone up through the roof. So I work both sides of it, but keeping people out of the housing market from buying is actually a benefit to me as a landlord. So you should remember that. But one of the things I find, just to wrap it up here, that I continuously find with people that are negative all the time or call for these big corrections, whether that's in real estate or in the stock market, which they're way more prominent in the stock market because the stock market moves at much quicker pace. But there's a number of things that these guys always have usually. They're always on what I call on the outside looking in. So they're not a homeowner. They're renting. And you see, they want to perpetuate the crash theme so that the market does go down so that they can buy. But you see, if you dig a little deeper, which you never can with these guys because there's never any transparency with them. They're blogging from their parents' basements. Do they have the money for the down payment? Do they have the spare $100,000 or $150,000 cash ready for the down payment? No. These guys are living paycheck to paycheck. They've got no money. Have they been pre-qualified for a mortgage, pre-approved? No. They haven't even looked into it. Are they able to buy when the market is down? In other words, I've done many blogs on this. Have they set a strike price or a date, a timeline? You have to do that if you're going to buy waiting for a correction. If you want to become a market timer, you're never going to time the bottom. So you have to be able to pull the trigger when there's dark and ugly clouds out there and the market is trending lower. Can these guys do that? 95% don't have a hope. They will never be able to buy in a down market. I can do it. I do it all the time, and I do it all the time in the stock market, and I've made a ton of dough doing it. But very few people have the experience to be able to do that, and they just don't have the ability to buy when a market's trending lower because it's never the right time then. Market's down 5%, well, it's going to be down another 5% in 6 months. I'll just keep waiting. So that's the thing. They're always on the outside looking in. They usually don't have two dimes to rub together. They're usually mad, angry, and envious. And that's why they perpetuate this doom and gloom narrative. Even though if the market does participate in their prediction and it goes down, which again, guys, markets always go down. They never go up in a straight line. But even if it does correct 10%, they still won't buy. They don't have the ability, they don't have the financial ability even to buy. They don't have the spare 100 or 150K to buy a one bedroom in Vancouver here, because that's what you're going to need. Market predictions, I've pounded home, they just don't work out. You're never going to be a market timer and time the bottom. I give Mr. Siddell credit again. You guys, if you go back 10 years on my blogs here, you guys know I don't make short-term predictions. What I always do, and why, if you go back 10 years in my blog, I think you'll find that pretty much everything I've said in this blog has come to fruition. Because I play it the safe way. I tell you to buy your principal residence or buy an investment unit and then keep the damn thing. Keep it for at least 8 to 10 years, but hopefully way longer. That's the safe way, because I know that you hold the property for 10 years, you're going to have capital gains on it. Even if the market treaded water, keep in mind, you've done a tremendous amount of damage to the principal at 2% interest rates. That's why I don't get into short-term predictions. It's a mug's game, saying that the market's going to go down in a year from now or in the next 6 months, like Mr. Siddell said. That's a bold prediction. I would never put myself out there with a prediction like that because it's a coin toss. But you see, there's no accountability. That's the thing with these people. If they're right, man, they're going to be shouting from the mountaintops. Look at how smart I was. If they're wrong, which they usually are, they just, again, slink away, never to be heard from again. No harm done. So don't play the short-term game. But here, Vancouver market will take a correction sometime between now and the next 3 years. It'll be a run-of-the-mill 5 to 10%. I'll throw it out there. That way I can toot my own horn when maybe this fall or next year, the Vancouver market does take a bit of a turn, because it always does. I've been through so many. Remember, if you want superior returns in the stock market or buying an investment unit, putting a tenant in it, you've got to hold the thing. Because to get those superior returns are not going to come in a straight line. There's going to be rough years. I've had many rough years where my stock portfolio and real estate portfolio is worth far less than it was the year before. It's par for the course, though. You have to get comfortable with that. And ignore these short-term predictors here, these doom and gloomers that will most of the time be wrong and then just slink away, never to be heard from again. Trust me, they're all the heads of Wall Street is littered with the heads of these guys over the years, these short sellers and market predictors that were dead wrong, and they just quietly go away. Buy your principal residence, enjoy it, keep it, buy an investment unit, take advantage of the low interest rates, put a good tenant in there, use the leverage, use it controlled, don't over leverage. You can't with an investment unit, you're going to have to put 20 or 25% down anyways. Keep it. Max out your RSP and your TFSA, put that into good, low-cost ETFs, S&P 500, buy the Triple Q, the NASDAQ, and just keep it. Don't try and time it. You're not smarter than Wall Street. That's the only advantage you're going to have. I'm Owen Bigland. As always, thanks for watching. I'll see you next week.